Is there a moderator?
No, you can just go ahead and start whenever you're ready.
Well, I was assuming that today's discussion, as you said, was about the VIX and about trading news. Is that correct? So let's start with a key look at the VIX and how that's reacting of late. It's important in a day like this to see that the VIX, which had run all the way up and spiked up just a couple of days ago into the high 20s. That's the highest level we've seen since, let's say back in May when it spiked, right in that area. And then we came down. And we've also pulled back quite a bit. And the market rallied quite dramatically today. Obviously, they had the FOMC whipsaw action, which we see a lot when the FOMC has a statement to talk about. And you saw that Powell's statement, and the FOMC basically decided to remain accommodative and didn't give any signals about interest rate increases or any of that stuff. And the market liked it, I think. Today was a spectacular day on the market in my mind because there was 2,600 up and only 600 down, a ratio of about almost 5 to 1. Yeah, 5 to 1, something of that nature on New York. And the up down volume was 7 to 1. On NASDAQ, the advanced declines were 2.5 to 1, and up down volume was 3 to 1. It was a very nice underlying technical day for the markets. Now, what I'm seeing here is that we came down in multiple waves and bottomed on the NDX at about 14,820, and the S&P bottomed around the 43,034 zone, up right down here. And we then had a pop and a 3-wave corrective coil, a breakout and another coil, a flag, whatever you want to call this, consolidation. But I think it's going to lead to more upside in the next few days to test overhead resistance to 44,3040 zone, and perhaps even as high as 4460. But for now, the areas to watch on the S&P 500 is 4378.80, and then down around that 4350 area. Those are key levels for me going forward. You always got to watch in a longer trend of things. And let's look at S&P 500. We've had a dramatic 1, 2, 3, 4, 5 waves down, in my opinion. This is 5 waves down and a bounce. Another mini, but with 5 waves down and a bounce and a large wedge pattern. Looked like an inverse head and shoulders. It did not break out. It broke down and then led to this gap down a couple of days ago and a spike low. We didn't get the deep negative tick I usually like to see in the 1,1400 range, if not more. We got down about, I think it was 1130, but close enough for government work. We certainly got down to a level where there was some support in the indices just below there. And so I'm not surprised to see the bounce. What we did get was a V bottom of the right-handed extension. It held support at 4350. Another gap today brought it up to resistance at the declining 50-period moving average on the hourly chart. That's a key level that I watch. So we haven't really broken back out yet. And even if we do, if we have a 1, 2, 3, and this is 4, the 5th wave might get you to 4440 and still not break above the declining tops line. That's always a possibility. What I'd like to see is 5 waves up, a pullback that consolidates in that zone, and then up she goes. That would be the ideal scenario. But to me, there's a possibility based on what I've seen so far that unless this thing collapses immediately tomorrow, that there's we may put an important low here. At the best case, at the worst case scenario, we're filling the gap and maybe testing overhead resistance. But that's quite a ways off the low. We've already gone from 43.05 area, 43.04 to about 44.18, 17 today. A nice 100-point rally on the S&P, nothing to sneeze at. So how is the VIX important in all of this? Well, I'm always viewing the VIX as a oversold, overbought indicator. Even though I drew a line on here and it's a downtrend, basically, it looks like it broke out. You just can't chart an indicator like this, like you do a stock chart. They're too volatile and they don't give that same kind of trend unless they're breaking out. Now here we had a breakaway gap, an explosive move that saw the VIX go from 15 to 80 some odd. And the UVXY, which is the relative attached type ETF, at that time, as you see, went from it made a monstrous move from 106 to 1300. This is a reverse split, by the way. It went from 10 to 135, and so that kind of move, we're always looking for an incredible spike up move That one was really exacerbated by the March decline, of course. And this one may not get anywhere near, but if it does break out, you want to watch the early week highs around 30.80. You get through that, you may have a shot at 38 or more to test the declining top line of lateral price resistance that comes in around 38.75 to 40 in that zone. That would be my target. If the market rolls over from here, it gets whacked. But based on what I'm seeing today, pretty heavy downside volume and a big pullback and a gap fill, by the way. So sometimes you get a gap and then they fill them. So there's a lot of what ifs going on in the markets right now. But I like the patterns off the lows. They smack up an important low like we had in here or in here when the markets went on to make, higher highs. I'm not saying we're going to make higher highs, but I think we can at least rally back to the declining top side. So I'm looking for 44.40, and then we'll have to make a decision as to where we're at. Now, every day in my room, I trade news. And what do I trade? I trade the patterns that develop off the news. Let me show you some examples from today. Now, I don't remember what the news was on AX, but they had some biotech news and a stock popped and ran. And this is pre-market, and then pulled back sharply and ran again, and then pulled back sharply. And by the opening here, there was a little flag that I developed. I put a buy on it right there when it broke out. I told my people at 16, this stock is in breakaway mode with big volume. My first target was 17.5. My second target was 18.5, and then we went to 19.25, and finally I had a target of 20. The stock's peaked at 20.66, overshot my target by a bit, and you can see I told my people at that point we're long in the tooth. We've gone from 15.5 to 20.5 or better. 5-point move inside of 3 hours. We'll take it, and we did, and you can see that it pulled back a couple dollars. But when you get news and the patterns develop that same way, it's always beneficial to take advantage of it. Now, AMD, there was some news on it. I don't remember what it was, but the stock broke out, pulled back and wedged, and we got a nice trade on it this morning quickly from a pullback low there at 521 to my target, which was 6. We actually got to 599, 1 cent off the high and my target. This is why I always tell my people, do not go for the exact target I give you. Go, if I say 6 is a target, take 595, 598, but never look for round numbers. Round numbers are what amateurs look for. Professionals don't sell round numbers. I can guarantee you that. I hear that all the time. There was some news on Gautu and the stock popped on that news. Now, immediately, when you see very, very quiet, and all of a sudden, 230,000 shares traded in a minute, the stock pops 15 cents and starts to churn and go, and then it follows through with another bar of 300,000 shares. And look at that trend the rest of the day. It went up in a basically 1, 2, 3, 4, 5, wave 1, wave 2, wave 3, wave 4, and the 5th wave spike up at 230 is where I told everybody at the top of the channel. If you have 5 waves and you top of a channel anywhere near lunch hour, early afternoon, you'll take it. My target was 333. We hit that exactly, and then backed off to 308. There was news on ONTX yesterday, and last night it just exploded and pulled back in a falling wedge and popped and double bottom. But by the time the market had been open an hour, it broke back out again. We put a swing on it at about 590. Within a half hour, the stock was 677 for 87-cent trade. And the rest of the day, it's been consolidating that run. And what looks like potentially a nice coiling consolidation for the next leg up. When you step back and look at an hourly chart or anything, this one, excuse me, this is a daily. Let's go to hourly. When you see an hourly chart that indicates a base pattern, and we explode through it and get a wedge pattern, I would keep my eyes on this one for tomorrow. If this gets to 6 3/4, it could be 7 1/4, even 8 on momentum alone. Just before the markets opened, the stock of YMI popped and coiled. And by the time the market opened, and there was some news on it. Again, I can't quote you the news on any of these things, but what triggers me in the morning, what I do is I come in the morning and spend over an hour going over charts and news and relative patterns that are associated with the news. And I take a look at the pre-market patterns that are setting up for a day trade. Now, if you look at YMI in particular, after some news hit, it went from 360 to 421 in about 3 minutes. It backed off, did a Fibonacci 0.618 fib retracement, and then formed a beautiful wedge, got very quiet near the apex, and then exploded on volume when the market opened. I said buy the first pullback. It pulled back to 406, popped to 458 for more than a 50-cent run, had a three-wave corrective coil, broke out again, had a mini wedge and exploded. I told everyone the target was 5.25. We had 523. 523. Folks, if I get you a target and you're within 1 or 2 cents of the target, I think that's pretty good. We had a now corrective pullback, but I always tell everybody, you've got to stop or sell the targets. If you look at where the lower was on WIMI, you'll see that there were a few, right here was a support level. It took it out, bounced one more time, and then got hammered, snapped back, kept going lower. At the end of the day, you'll see from 523, it made it all the way down back to 406. Pretty big pullback for a $4 stock. But that's why we sell what we can, not when we have to. You pop and wedge, this is a favorite pattern of mine. Once you get a breakout from a wedge, we often see this kind of a move. Now here's an interesting, so CLS had, I believe, some news on a small accretive acquisition, it might have been. Anyway, it gaps up, it goes from 847 in minutes to 923 and gives you a little wedgy pullback, at which point I said, if this isn't going any lower and it starts to move, we're going to go long. So we went long about the 920 range, and it didn't do much for 3-4 hours while it consolidated, but eventually it made it up to 960. Nice little scalp play for the day on that one, just on pure momentum alone. Stitch Fix had earnings. It exploded and pulled back. And right after the opening, we had this coil pattern. As soon as the market opened, it went vertical. It gave a little pullback. I said, buy this pullback. It looks like it can make some noise. And it went from around 39.90 to 41.70 pretty quickly, about $1.80, then formed the coil. And the rest of the day just consolidated in a larger extended coil pattern, which is a good setup for tomorrow. See, one of the things I do every morning is I look for stocks that are moving pre-market. Now, if you get a stock that's moving pre-market, it might be a setup. Sometimes the entire move is in a pre-market and it dies. That's why I always set stops. When you trade with the tech trader, with the tech traders in our room, you'll see that every buy recommendation I give you, I tell you where the targets are, where the stops are. I actually give you 2 targets in most cases, a first and a second. But what we normally do is look for ideas that occurred that morning. But every once in a while, a stock that pops like that and coils near the close and holds on to a gain of 564, 16% on 13.7 million. We'll take a look at the volume today. It was the biggest volume since back in June. So if that's the beginning and a breakaway gap above 2 moving averages, which we see on the daily, I can expect to see a retest of 43.75, maybe even at the declining moving average coming in at 45. So that 43.75, 45 zone would be my first target zone right there. If it should get through that, I'm looking at 49 to 51 zone. The other thing to always consider in downtrends, how many waves down does it have? It looks like a 1, 2, 3, 4, 5. This is wave 1 and 2. This is 3 and 4, and there's your 5th wave. Anytime a stock comes out of a 5th wave decline, it's a nice orderly declining channel, suddenly breaks away with a breakaway gap like it did today. This might very well be a really good swing trade going forward, folks, so keep your eye on Stitch Fix. Now, over the last few days, I saw the breakout on ARQQ out of a wedge. It popped and had an inside day and then went ballistic. I'm not sure there was news on it per se today, but traders were all over this one. And sometimes when a stock's in the news a week ago and continues with momentum like that, you just stay with it. This morning, it popped and wedged, and then when it broke out here, we were trading at around 27.5. Eventually hit, that was yesterday, sorry. It popped here at about 30.25 across a triple top. When the market opened, it went vertical and was halted. I knew that this was in play. I told my people to buy the first opening pop. Well, it opened at about 34 and had a target of 38. It hit 38.39 for $4 in 5 minutes. It then formed a wedge and surged 38.88, only a nominal new high, only to settle back and form a coil. But is that a good setup for the next day? You betcha. So what I always will do is monitor stocks that did well and closed well or had a setup pattern for the next day. But the vast majority of stocks that I find are every morning on the pre-market gappers, runners, and looking for the relative news to see how powerful that news is, and making sure that it's not a biotech clinical trial or a phase one, which is sometimes, almost all the time, you'll see it pop them and drop them because it's so far away from being reality in terms of getting it released and getting revenue from that drug, which could take, several months, if not a couple, 3 years or more. So, daily, when you come into my site, let me just show that to you real quickly. This is the trading room. You can see that people are still asking me questions and still talking about stocks that are running after hours. And that's a picture of me right there. And you can see that very smart, astute traders are on it. I have just 2 eyes. I can watch so many stocks, but with several hundred people in a room at any one time, they're all watching the market and throwing ideas out. Just all you have to do is go to the main room, the TradeOutLoud.com. Hang on a sec. And then have that up. Hang on a sec. I'll be right there. Okay, so there it is. So what I want to see is when you come in, just click login, sign up, and put your email address and everything else in, sign in. The next thing you know, you'll be in a trading room with some very bright traders and astute people that know what they're talking about and have up to 15 and 20, 30 years experience or more. I have more than that, but there you go. Okay, so back to what we were talking about earlier, trading gaps and what they look like. ACY, our trading news as well. ACY is a very thin stock, very thinly traded, but when you look at a daily chart, you'll see that here was a massive breakaway in January, another explosive move here, and a coil. And today when it popped and broke out, I put a swing on it, and it ended up being up 621 or 17% today. Although it's very thinly traded, the stock looks like a $60 stock coming up potentially. Today, news out of China that they were no longer building coal facilities, coal mining facilities, or coal processing facilities, and some of the coal and related aluminum and steel stocks did very well today. You can see that the breakaway gap on the news from Century Aluminum popped and had a 3-wave corrected. When it moved back up, I told my traders this may be a good day trade scalp snapback trade to retest the high. So I went from 13 to 13.75 for a day trade. One of my favorite trades of late is ATER. And you can see why. This has been one of my best swing trades of the year. When it exploded and pulled back, it formed a little low volume wedge here and then broke out. I put a swing on it on the 7th at about $7. Within a week, it was 19. It pulled back. I put another swing on it. It's now moved from 9 back to 1870 today. So and look at the technical resistance across here. You realize that this gets above here, you're looking at a stock that could, I think, easily get up to the next resistance level. And that's in the mid-20s, 24.5. So keep an eye on this one, ATER going forward. It's really in play. It's had a 1, 2, 3, 4. The 5th wave is underway. Now, possibility of double tops here because resistance is here and it comes down. But if it doesn't, based on this angle, this stock could blow into the high 20s, low 30s. We'll just have to keep an eye on it. But I'm looking for strong patterns. I'm looking for stocks that pop in the morning, form coils and patterns, consolidation patterns. Here's a coil. Look at the breakout late in the day of this coil. That one volume bar of 891,000 shares here is what triggered this move. Then a wedge formed. It was a 1, 2, 3, 4, and a big 5th wave. The 5th wave had a 1, 2, 3, 4, 5 waves within the 5th. I cancel everybody. When you have the 5th of the 5th, that's what that's called. You exit the trade. 1870, it's already pulled back to 18. But if it has additional momentum, there's a possibility you can see 20.25. The way you stay in a trade is once we reach a target area, you sell half your position, if not all of it, and then you put a stop in under the pullback low. So under 17, either, what I would do is just say you had 10,000 shares and you sold 5 here. I would put a stop of 2,500 there and 2,500 there. so that if you stopped out while it pulls in there and then runs up, you still got a position. People always ask me, how do you stay in a trade? And that's by selling at targets, but only a partial position. And when you do that, you elect to try to continue to ride the momentum. But the worst thing to do is buy a stock at 5 and sell it at 5.5 and watch it go to 7 or 8. Because it's so frustrating because you had the stock, but you sold it too soon. I think everybody here sells stocks too soon. And also the other thing is, when you buy a stock, you accumulate it as you buy it in. You can even, and don't buy it on pullbacks. You buy on breakouts. You buy as the stock moves higher, you buy more. Jesse Livermore once said, "Buy high and sell higher." That was his motto and his secret to success. Averaging down is for amateurs. Averaging up is for professionals. For example, if you bought it here in a breakout and it pulled back, yeah, you could have bought it, but you would have been better off buying it right there. And then the pullback breakout right there would be buy more. Look, it's until the stock goes down, just keep buying it. Nice action on EEIQ. There was something that happened this morning. I don't know what it was. Midday, it suddenly popped on news. And as soon as it broke out across this coil, I said, this is the area to watch. 649. When 649 was taken out, the stock literally went vertical from 649 in minutes, was halted, and then hit 758 for more than $1 in 3 minutes. It then had a beautiful coil. Look when it popped right there. That one bar of 12 cents broke it out and just exploded it from 7.25 to 8.24. And it's still consolidated. As a matter of fact, when you get a big base coil pattern and it does a 1, 2, 3, you watch for the fourth wave to consolidate in a flag without breaking down too much. It could be a 1, 2, 3 wave down. But then you're going to start to see a semblance of what might be a trend channel. And stocks tend to move in parallels. So always draw a parallel line, always. Now, if it doesn't hold here, look for a move down to there on low volume. If it's low volume, like it wasn't here, right down there, low volume, then you can buy it from move to 8.75 from 7.85, 7.75, something like that. SOFI had something this morning. I don't remember what it was either. I'm not going to try, but the bottom line is it opened, pre-opening, it pulled right into a pullback low and then reversed hard. Went from 1560 to 1646, about an 85-cent run. But look at that perfect wedge. When it broke out of the wedge, I put a buy on it at 1635. And within an hour and a half, it had gone to 1707. Not going to get rich, but that's a good trade. And hit my target. And sometimes it doesn't work. When the stock popped and pulled back and then popped again, I put a buy out there. Didn't work because the stock barely extended it, pulled back, and the rest of the day just flitted around. As a matter of fact, a nominal break of the pullback support low occurred right there before it bounced again. But it's the kind of stock that's torture because although it doesn't look bad, it looks like a falling wedge. It didn't do much. I don't know, it might be a setup for tomorrow. If you look at the overall chart pattern, this is a 1, 2, 3, 4, and 5. And then the snapback is taken out the declining tops line. So what I would say, I'm looking for a move to test and take out that zone. And once you do that, you're looking at 6 3/4, 7 1/4, 8, something like that. But this is only the beginning, and without better volume, I would wait. Bitcoin was strong today. When I saw that, I looked at some of the Bitcoin stocks. Look at BTBT this morning. Market opened right about there. It was 871. It exploded in minutes to 940. Pulled back and wedged and broke out again. Eventually got to 975 for $1 trade on the day. Not bad. You can see the pop coil and the pop wedge. A nice challenge underway. You can see after hours it's pulled back, but it ain't done yet. Folks, trading news. Oil's up in the morning, pre-market. I see the stock trading right in there. And when the market opened, it immediately went vertical. So at $74, I said day trade with targets at 77.5 and 79. It didn't quite get to 79. It got to 78, 38, 40, something like that. Not a bad trade from 74, more than 4 points. Another stock in that list that I put out there, based on the fact that oil was running, is one of my favorite trading vehicles for oil. That's APA. You can see the pre-market pop, a pre-market pop gap. And notice one thing, that in the pre-market, this stock is sitting there on a platform holding. As soon as the market opened, it went vertical from 1915 and just kept going up all day till it finally reached 20.5 for $1.35. Even at the end of the day, it still hadn't broken support or was right on it. But the beauty of day trading is if you trade 1 minute charts, in which there's the same patterns as you see on daily charts, and you put your stops in the right place, VWAP there. Looking like a trend line was in place right about there. That's where it really broke for me. But then it snapped back, and did a kiss back and rolled over. Could be a head and shoulder stop. Wouldn't surprise me if oil was down tomorrow. Calyx has some news, I think, but the bottom line is that it broke out of a 6-month basing pattern after a huge move. Now, from a chart pattern standpoint, there's the major breakaway gap back in April 20. At $8, there's the breakaway price-wise. There's a retest, a little wedge, and a nice 1, 2, 3, 4, 5-wave move before a larger consolidation set in. But the falling wedge broke out and it ran again and then flagged or coiled. You can see how this stock has taken months to develop, but essentially it's gone from the March low where everything was down at 590 to where it is now at about a 9-fold increase, 800%, folks. Actually, a breakout right there, I would be long that stock. Well, there's several examples of what we're seeing in the market every day in terms of patterns. Luckin had some news on a settlement, and it's like gap popped and pulled back, and I said buy the pullback and then formed a little coil. When it broke out, that's where we put a day trade on it. That was at about 1584. Within an hour, it was 1639. Not a big trade, but a nice scalp, and then it flitted away. But the overall chart pattern indicates it's holding support. It's forming a wedge. And break out of that pattern, you're going to be high teens and low 20s. One of my swing trades, AEHR. Again, I love coils and pennants. Look at this explosive move in July. Taking the stock from about 245 in a week to 860. This is more than a triple. And it came down and bounced. When it bounced, I put a swing on it, but it was a head fake because I needed to retest. But eventually, I only delayed it a week. A week later, it started a run that took it from 508 to 1241, 150% run. Very nice. Matter of fact, today it popped out of a coil and may be on its way even higher. So to get above today's high, 12.5, 55, I'm looking for 16 and 19. Great chart too. One of our better ongoing swings as well. This morning, DATS broke out after popping and pulling back. This is very whippy for us. Some people got stopped out. You know, no trade's perfect. Some maybe. In this case, when I look for charts and patterns, I look for consolidation patterns on low volume. If you take a look at the falling wedge, it's basically a 1, 2, 3 wave falling wedge. During that period, the volume was fairly light comparably. There's your breakout. It retested, it popped, made a higher low, and then just took off, reaching 893 for my entry point, about 8.25. And then it got slam dunked here and took out all the stops in my room. My traders weren't happy with this one, but that's why you have stops to protect the bigger loss. So you stopped out at 855 and you may have lost a dime or 15 cents, but you were a happy camper when you saw that stock hit 792. Worried about copper and I'm worried about FCX, and I'll tell you why. I was long from 13 and here when it ran and broke out above these double tops, and it just kept running. It got all the way up into the mid 40s from 13, almost a triple. Now, if either this is a left shoulder head and a complex right shoulder, or simply a declining channel, that could deepen or get worse if it takes out support, which it looks like it might have done the last couple of days. Unable to rally back much more. It's could see lower levels. I have a whole list of bucks and shorts. If the patterns that work on the upside work on the downside, just in reverse. But when I see news, for example, there wasn't a lot of news. I mean, there wasn't a lot of action on this news, but there was a pop and coil pre-market, and when it broke out, we gave a trade on it. It went from 1459 to 1514. It's about 45 cents. Wasn't a big deal. And it broke down quickly. This was a stock that I thought would benefit by the fact that China said no more coal mines in America. Not going to build any more coal mines. So the bottom line is that coal stocks popped like that, but they all did this eventually. So that was I would call it not a good trade. Another one is Saba, which was moving in a coil yesterday. This morning popped dramatically. But look at this sell-off. Well, at least we got in there in the 53 3/4 range and watched it literally go to $15 to 68, only to turn around and break support when I told them that your stop is at 62. And eventually it went below 50. From 62, within 2 hours, it was trading at 48.83. So that's why stops are imperative when you're day trading. Imperative. Now, this is a stock based on the base pattern that's developing over the last few hours. It would be a candidate to watch for a breakout over 52.5 because it formed the base, it formed a little coil. And if you can break out of that, you may see a pop at least to 54, 6, and 8 potentially. Don't forget, it came down from 68, a lot of room to snap back. Now here's a head fake I want to show you. It doesn't work sometimes, but that's the beauty of stops. We got a beautiful pre-market bull coil. Market opens, it pops dramatically to 28.21 and then sells off like it was made out of lead. So I had stops here underneath these held lows. I said, takes out 27.5, you're out. Well, later in the day, the stock traded at 24.25. So that's why you got the trade stops. Back to the indices for a minute. I want to give you my take on what may be going on additionally. Sometimes you just got to step back and take a look at the larger picture. Again, when a stock is in a definitive uptrend, this goes back to June 29. So it's about 3 months. If you look at it going back further, it was 1, 2, 3, 4, 5. And the fifth of a fifth here, followed by a topping type pattern, a breakdown, and a rebound back to it. It's almost a no-brainer. This has to go lower. When you just basic technical analysis, 5 waves up, form a little top, break support, go along the UVXY. Well, that's what I do. I like when I see the stock react. UVXY reacts to the market. Take a look at that surge with the market rollover. 21 to 31, $10, 50% move in a day and a half. That's how quickly that thing can pop when it does go. Of course, with the market rally, it's come all the way down. Very orderly fashion, mind you, which isn't bearish. Well, I mean, obviously it's not bullish because it didn't move up, but the point being, it's back down in a support zone right there that it could or might hold. And if it starts to move up, You only trade UVXY on a move above 24 and a quarter, 24.30. For me, it's got to take that out to start triggering a move to 26 and 3/4, 28 and 15, and those kind of targets. So what we're looking for market-wise is the possibility that if we don't push it, and I mean push it soon, this could turn out to be a rising wedge, a rising bear wedge, and an ongoing declining channel, which is a 1, 2, 3, 4. If it's a 3-wave corrective, that's great. You've reached the bottom and we're going up. But if it's a 4-wave decline, we're going to crack key support. This baby can come down here, and that's 14,425. We close at 15,176. We're talking 750 points down, or 5% more on the NASDAQ 100. Relatively, the S&P 500 has done something similar. Large 1, 2, 3, 4, and 5 waves here. The topping pattern was when it broke that level, snapped back to it and the moving average, and failed again at the moving average, did it again there in this range, and it got slam dunked. So when you break that kind of a pattern again, you might have, could be, we'll find out soon, a rising wedge. Rising wedges to resistance are often devastatingly negative or can cause at least a retest. I'm thinking that's for starters, that we back and fill in this area and then go higher, or we may have to come all the way back down here and do a 0.618 Fib retracement or a little bit deeper even. But remains to be seen which support level will hold, if any. There's 1, 2, and 3 for retests. 14, 44, 18, 20 is needed to be taken out, as I said earlier. So in terms of a discussion, the way I look at stocks when they break out is how do they react after the breakout? Well, in this case, spike up, pull back for 2 minutes, and then start to run hard right away. And then when it does break out, it pulls back and tests the high and doesn't break down. It also holds the moving average and the VWAP, the volume weighted average price line. From that level, you had a chance to buy this one about 27 and a quarter. And you got to pop to 30.81 for about $3.70. Nothing to sneeze at. It did it pretty quickly too. In a 1, 2, 3, 4, 5 wave advance. Gee, it's amazing how that works, isn't it? So watch for, if you learned anything today from me, watch support, resistance, trend lines, moving averages, breakout gaps. I think the old adage about gaps need to be filled is 100% BS. I mean, you need to fill them. You could fill them, and sometimes it's years later. But when the trend's in place, you don't care about that opening gap if it doesn't, violate a support level. For example, when it started to move here, you could have put a support right in there. When it broke out there, you could have put a support or stop under there, which it held, here, which it held, and then finally it broke. I'm going to pay more attention to this one on and out, because with a gap and run in a 5-wave advance, 1, 2, 3, 4, 5, to a lateral price resistance near 31, it's almost a no-brainer to sell this stock and get out of Dodge. More examples of stocks that are gappers and runners. I mean, this happens all day. You see stocks coming, getting ideas from my traders all day on things that may be taking off. And then sometimes we miss moves like this one. I mean, you just can't watch everything. AMR, there's an explosive pop in some news. I think it was earnings. When you see a base pattern like that and a stock breaks out with a gap above that, it starts to run like the wind. This stock hardly even stalled here for 3 minutes and here for a little bit longer. But at the end of the day, this stock was trading its highs almost 51 from where we would have entered around 44. That's $7 right there. The fuel cell stock did well today. I think there was some news on a contract or an order, and they all ran in sympathy. I think the fuel cell got the good news. This one went 595 to 676 and solidly consolidated. Always have to consider where the move begins and where it comes from. Is it out of a base? Is it a consolidation move off of a ended up breaking out of a consolidation move. Just as important, stocks tend to move in 5 waves, and there's a 1-2. So easy stop on the VWAP and price support under 650. It's only a dime from there, low risk trade. Upper side is 705, 750. How do we trade gaps? How do we trade? You trade with targets, stops, and draw your lines in. Look, people have always asked me, well, where's this line from? Let's look way back. You see these highs in there? In that zone? That's why, and a high there. That's why that line's there. I could just as easily do this and draw a line off that spike high and get an idea where resistance might be. Folks, one of the things that amazes me is that there's a lot of people in this room that once they make a minute in the trading world, that once they make a mistake and the stock goes down on them, as soon as it gets back anywhere near even, they're out. It's kind of like, are you really trading just to break even? No. So a lot of times the stock will do that and then pop and consolidate and then just take off hard, sharply. So David, I'd like to find out if there's anyone that has any questions at this point.
Are you able to see the chat?
I am not. No, I'm not. So does that mean you have to throw some questions my way?
Let's see. Do you ever enter trades pre-market?
A lot. Well, a lot of my traders that professionals do. A lot of times you'll see pre-market runners that are up sharply. I'm not sure if MRIN did that today. It did indeed. Look, it popped and coiled. When it did that, I tell my people it might be a day trade right there when it broke out about the 990 range. And literally within about 7 or 8 minutes, it was 1116. Sure, it broke down. And that was before the market opened. Or was it right at the opening? Yeah. Right after the up market opened, it dropped down and did nothing the rest of the day. And I told my people it's dead to me. But I always trade pre-market patterns if they're right. Let's go to 1 minute. I'll show you what I mean. If you looked at it back here, watch this. You'll see a bull coil, right? It popped and coiled. The one thing I do is always wait to see if that coil gets any volume coming out of it. Watch the bottom bar right there. That's what triggered me to put a buy out at 990. It was 993 or 4. And subsequently, consolidated, did it again, pop. And then it got up to 11 and change, consolidated, took a few hours to do that, and then broke down. But you notice that line I drew in there at 11, I told everyone the target for scalp was from 990 was for 1090 to 11, it hit 1116. So that trade was done unless you were waiting for target number 2, which was up here. What you normally would do is stop out. You can see that it took an hour consolidated, but there it broke. So I'd have been stopped out with a small loss on a second trade. Any other questions, David?
Yeah, William is asking you to look at BLI.
BLI is in boy?
Yeah, that one.
Oh, Berkeley Lights. And look at it with what in mind?
He just asked you to.
Well, here's what I see.
you-
1, 2, 3, 4, 5. Consolidate, roll over from a big wedge that looked like maybe this is a base pattern, but it could also be a big bear coil because guess what it turned out to be? A bear coil. It broke down, could not get back to resistance, and then flitted around for a month before rolling over and getting slam dunk. This is what we call a southern climax, leaving a nice tail. Too bad it's not a bullish one. The pullback, look, you cannot pick bottoms. I always say, wait for them to make a higher high somewhere. So what I need on this one, quite frankly, watch it over 27.5 with volume, and then you have a gap resistance at 29.75. So 27.5, 29.75 are your short-term day trade targets, and then there's a gap fill at 32.5. 27.5, 29.75, 32.5 are your targets. That's the way I find targets for my stocks. You can always look at declining tops lines, which comes in around 32 as well. So that's the maximum I would look for before it pulls back and does anything. But this hasn't completed a bottoming pattern, and it was one good up bar. Every other one's red. Yeah, I know that there's a lot of people who likes this stock that I've been talking to institutions that do. It's gone from 113 folks to 20, and under 20. So why would you want to try to pick a bottom and catch a falling knife and cut your hands? Doesn't mean it can't be a bottom. It just means that it needs to prove some more to me. Next question.
I'm not seeing any more. Anyone else have any questions for Harry? Oh, could you please take a look at IVZ?
Invesco? IVZ?
Yeah. Mm-hmm.
Okay, well, this is an asset management firm, and I think they're the people that do the QQQs, aren't they? Yep, Invesco QQQ Trust. So right now, you get this is a nasty, nasty pattern. You know what it's called? David, you know what that's called?
What's that?
This pattern is an island reversal. And when you get a gap up, you get a gap up and a gap down, like that, and it can barely bounce, you better not let this one get under 23. Stop under 23, period, because if it breaks that, a lot of room to drop. I'm not saying it's going to, but your resistance now is 24.80, the gap at 25.20, and the gap fill 25.90. So this is a sloppy pattern. This looked good there, but the day it broke down, I would have sold it on the opening. It's a breakdown gap and talk about a head fake. In addition to that, go back to the last high and his resistance here and there. This is going to have a tough time going forward. I would rather short this than buy it long, although I won't do it because the underlying technicals aren't weak enough.
Okay, how about FDX?
FedEx. Wow. There was some bad news on that, wasn't it today? I don't remember what it was, but it could have been earnings. But here's the bottom line. Back in September, a little spike low reversal. I came to 230. And back in January, 234 change. Today's low, 228.98. And it closed under 230. That is not a bottom, that's a breakaway gap to the downside. I don't know exactly how far they can take this down. But my guess is if we get any bear phase, this is a $180 stock. And I wouldn't touch it this with a 10-foot pole until it ripped through 240.41 with big volume. And even then, I'd have to be careful because it could be just a gap fill and then it rolls over. It's got to be a tricky little stock. And just because the stock's cheap doesn't mean it can't get cheaper. Yeah, the stock went from 320 to 229. It's down about 91 points. Does that look good to you? Look, it's possible we're going to get this kind of a bottom here and up we go. But you would have had plenty of time to buy this stock when it broke out there or retested there. I would wait for that and not anticipate a bottom. Because if it breaks, kitty bar the door, that stock could get crushed.
All right, how about INO?
Well, that was a nasty engulfing bearish reversal today. When you hit to the 50-day moving average and close down on the day and engulf the prior day, yikes. That's all I got to say, yikes. Biotech's either good or they're not. If it's not a good chart, stay away. Until today's high gets taken out, 8.5 with volume, I think the odds are better than 50-50 that it retests the lower, makes a lower low. Not a pretty chart. Now, the overall chart, multiple waves down and a pop, and then a long multi-month, we call it a platform. Stop under 740, period. 740 stop. You don't want this going back to 6 or less.
How about Apple?
Well, I was telling someone today, Apple's turned into a commodity stock. It's not, doesn't move like it used to, certainly after multiple splits, 5 for 1, 3 for 1, whatever. The good and the bad. The bad is multiple layers of support and multiple weeks of support. On this line, broke 2 days ago with a breakaway gap to the downside, a big volume. That was Friday. And we thought it was quad options expiration. So now that we've snapped back, you're going to find heavy resistance about 148, 49, 15, that area. 148, 49. If it gets through that with volume, it's good to go. If it doesn't, this could be a 1. This could be a 1, 2, or it could be a 1, 2, 3, 4. But either way, I don't see Apple is done until I see a gap up and or strong up bar like I had here, or one like we had there, or even one there that's basically a convincing bar with volume that tells me this has reversed itself. The market needs that, but will it get it?
And about CVS.
CBS is the same.
CVS, the pharmacy.
Yep. Kind of the same thing here. Technical, big support, 79.5, but the immediate support, and you don't want it under 82.5. You get that, you may see 79.5 or worse. And the other thing to consider is always draw your lines off your trend line. That's what it looks like to me. Why do I have that there? Because it's parallel to that line or close to being parallel. I would say if I see this reverse and get back over 87.5, then I'm thinking we're going to 90, 95, maybe 105. But until, and it has had what I consider a 1, 2, 3, 4. So I'd be looking for another wave to ensue. If the market continues well, this could work well. Mid-channel target, 93.4, upper channel target, 104, give or take a point.
All right, how about MGI?
MoneyGram. Well, you know, when a stock is looking this good, 1, 2, 3, 4, 5 waves, and it comes down and tries to get through that 5th wave top and can't, it's dangerous. And not only is it dangerous, but now that the trend line's broken, and the stock's making lower lows. So yeah, I know it was up today on low volume. Relatively to where it was, that's low volume, see it? So I start drawing my lines there. I pull up resistance at these lows and at these highs. So over the last 4 days, it reaches high as 932. Above the 935.55 range is where I think it can explode into back to 11 and 12. But for now, it's still in a downtrend. The only saving grace is this downtrend could be a falling wedge. Stocks tend to form wedges, and when they do, they break back out. So wait for a move over 9.5 and go long. On the other side of the coin, a tight stop here under 8 might be warranted, because it gets under 8, it can be back down that 6.25 range. Don't forget where it came from. When you're in a stock, always look at where a stock came from. This stock was $1.20 and it ran up to 12. So that's a 1,000% or 900%, 12-fold, a 10-fold increase. And now it's coming down. If support gets broken here, it may not be pretty safe. There's one other saving grace, is that there's a trend line right there.
All right, time for one more quick one. XBI.
XBI is a boy?
Yeah.
Yeah, the biotech. Quite frankly, before I go any further, I know which ETFs are best. The LABU acts really well. There's a V bottom of the platform. This one, same pattern. If you want to trade, that's fine. I don't think it's as liquid, but it isn't illiquid. There's a lateral price resistance at 141. That's my target. It gets through that, then I would look for a test of 149. So 141 and 149 are targets, but before that is resistance at 136.5. You got to get through. And I would not let this go under 127, period. That's my stopping point. And I guess that's it for today.
Yep, sounds good.
Thanks, everybody.
Thanks, Harry.
Yeah, you guys can go to the techtrader.com and get a free